Alright, welcome back. It's me from a financial firm. In this video, I want to update you on the latest with the British pound. As it stands right now, GBP USD is trading just below 1.3650. We did have a very slight uptick this morning after the release of the US inflation data, which came in at 8.6% year-on-year, slightly above expectations. And that did boost the US dollar initially. However, the dollar index has since fallen back below 104. And as we saw in the previous video, when the dollar weakens, GBP USD tends to strengthen. The reason being that the US dollar is the denominator in that pair. So a weaker dollar means that the pound is worth more. But let's not get ahead of ourselves here. Right now the pound is still under pressure. We are still below that key 1.3650 level. And there is a big event coming up tomorrow that could see further weakness in the pound, and that is the release of the UK CPI data. Now, if you watch my videos on a regular basis, then you know that I don't put a huge amount of emphasis on CPI data. In my opinion, it's not as important as GDP data, but it can still move the markets in the short term. The latest CPI data from the UK is expected to show an increase of 9.1% year-on-year. And if this data comes in higher than expected, then we could see the Bank of England's tightening policy priced in further, which would result in a stronger pound. However, if the data comes in lower than expected, then the opposite would be true, and we could see the pound fall even further. In this scenario, the market will start to price in a less aggressive tightening from the Bank of England, which would weaken the currency. Now, I wouldn't necessarily be looking to take advantage of this because remember, we are in a period of heightened volatility. Just because the pound might dip a little bit on lower than expected, CPI data doesn't mean that it won't bounce back just as quickly. If anything, I think this just highlights the need for traders to keep their trade sizes small, use tight stop losses, and to not chase after big price swings, because those big price swings will most likely continue. As mentioned in the previous video, I think 1.3550 is a very important level to hold in the short term. A break above this could see the pound head back towards 1.3750. But until we see a break of this low, I think we could continue to see some choppy sideways price action. So that's where we find ourselves right now. Not much movement in either direction. Very little upward momentum, very little downward momentum. Until we see a decisive break in either direction, I think we'll continue to see this consolidation. Of course, things could change on the back of the CPI data. But it's not necessarily something that I'm going to be trading. I'd rather look for an entry on the 5-minute chart when the time is right. If you want to learn more about how I trade, then check out the link below. And if you like what you see, feel free to subscribe. I post new videos every single day demystifying the markets. That's it for today. Thanks for watching, and I'll see you in the next one.